watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Banco Central is expecting a larger surplus in the balance of payments this year, amid signs of recovery in the global economy. The central bank sees a surplus of $8.1 billion in 2020, equivalent to 2.2% of the GDP. This is wider than the outlook of $600 million or one-fifth of the GDP given in June. The BOP summarizes the country's economic transactions with the rest of the world in a given period. Governor Ben Jokno says the higher BOP surplus forecast is anchored in its revised forecast for the current account. It now sees a surplus of $6 billion for the current account, a turnaround from its deficit forecast of $1.9 billion in June. The current account includes trade, remittances, profit from Philippine investments overseas, interest payments to foreign creditors, and foreign grants. All right, got lost a bit there with the script, but then
No
another tepid
worries.
say of trading yesterday with our index still stuck in that tight range. What's it going to take to break out?
All right, Jess. Well, here's what investors are really looking at passing the 2021 budget. That's what. So it seems like a deja vu of what happened already last year. A lot of debates on that budget impasse. And this, according to Diversified Securities' Aniceto Pangan, yesterday the market continued on a consolidation mode. You can see that on my terminal now. How since basically, the rebound on May, that was a sharp rebound. We really haven't broken out of the 6,000 levels. Again, we've just been trading sideways here for several months now. It seems like, the lockdown is also giving the pinch also in our equities markets. Now, basically, he said that was because of the House of Representatives having resolved the speakership row yesterday. That gave a bit of relief, so to speak, on the markets. But nevertheless, it's really that which has weighed on the markets in the past days. It's not just because of leadership issues, but really threatening a delay in passing the 2021 national budget, which of course economists are saying may be detrimental to what we really need post-pandemic. Now, another thing could also be the drop in U.S. stocks overnight. And this is according to Regina Capital's Luis Limlingan. And that drop, and you can see that on my terminal here, was after there were problems yet again linked to finding a coronavirus vaccine, right? So again, another failed, so to speak, trial over in the US, and that had weighed on market sentiment. Nevertheless, the good news is that value turnover was a bit better than usual, closing in on 6 billion pesos worth of trades yesterday. Nevertheless, foreign investors continued to be bearish. But the good news when it comes to foreign investors is that the selling of the stocks is tending to be slowing down. So that's, of course, as we did see the peso also weakening, so possibly some inflows because of that. But generally, the 5-day moving average of the net foreign outflows have slowed down to $15 million per day worth of outflows. You can see that on my terminal here. But that's compared to the 20-day moving average of $15.4 million. So just slightly weaker than before. Now, another thing to be watching out for are the stocks that had been moving yesterday. I'm just going to be seeing if I can actually pull that chart out for you. But basically, yesterday we were watching LTG Group very closely. That was actually the best performer. Guess what? It hit as much as 12% of a high yesterday, finally paring back those gains to as much as 8.8%. And take a look at LTG Group this morning, and 7 minutes of trade, it's still the best performer, up by 1.8%. Now, that's, on the back of the news that their Asia Brewery unit and Heineken have agreed to transition into distributing and actually producing Heineken and Tiger Beer here in the country. So, a lot of exciting things going on for LTG Group. We had talked about that at length yesterday. Nevertheless, just a very quick peek at the other movers this morning. You've got Aboitiz Equity Ventures sitting out the rally, or let's say pulling down the stocks. That's down by 2%, as our local board seems to be going towards the red this morning. That's down by 0.02%. But of course, just let's let markets percolate. Hopefully this these losses don't hold until the end of the trading day.
Well, let's see about that. But for now, equities staying rather sleepy but the bond market has been seeing record issuances since the Banco Central started its easing path. Who are the latest to jump in on that bandwagon?
Okay, so I'm just gonna try and pull out for you our yield curve, right, of the Philippine government
Mhm.
securities. This, of course, as we are seeing the lowest interest rates on record, as the central bank has eased, of course, and tried to put in more liquidity, tried to encourage people and especially corporates to start going into the markets and getting some money and some loans there. And we do see a flurry of big guns actually tapping into that. You've actually got Del Monte. They've gotten the SEC permit for up to 7.5 billion pesos worth of a bond registration. You can see on my terminal here the yield curve. And another one, and we've been talking about this for quite a while, SNC Global Power. That's $400 million worth of senior perpetuals, and that has now been priced. It's around 7%. So they're going to be using the proceeds to partially finance LNG facilities and power assets, and also refinance their commitments and also general corporate purposes here. Another one that is tapping these markets right now, taking advantage of those low rates, is 8990. So they've issued 1.3 billion pesos worth of notes for loan refinancing. So that's around 4.05% per annum of an interest rate. So if you're interested in that, that actually is returning more than the equities market as of today. Nevertheless, they have mentioned that they have 20 projects under construction. They're still doing a capex. It's around 5 billion to 6 billion pesos. And this actually, because of this listing, Jess, we have now seen on Wednesday the PDEX. So PDEX is the equivalent of the PSE, right? When it comes to
Mhm.
bonds, that level of outstanding listed securities is now at 1.5 trillion pesos. So there are 1.5 trillion pesos worth of bonds now trading and being listed. That's up 12% from the same period of last year. So that's quite exciting there. There's a whole new market to be watching out for. Now, recall, it's not just bonds, however, that are, in focus. There's still people that are in corporates that are very, very hopeful in terms of the equity space. And one, of course, that we've been watching very closely is Converge. And this now, latest news on that, this is from Ed Francisco of BDO Capital. We've had him on the show several times. He is saying Converge IPO will be the Philippines' biggest post green shoe. What does that mean? It's going to be the biggest after oversubscription. He says that the demand from both local and foreign investors is at more than 4.5 billion pesos. Of course, BDO is one of the book runners here and underwriters. It's going to be the largest IPO, not just in the Philippines ever, but by a Southeast Asian telco since 2017. And he's assuring investors there's a good mix of institutional investors, pension funds, retail demand across a great deal of brokers. So very exciting times there, especially since we have had several people on the show saying that the IPO is quite pricey, Jess. It's more than 7 times the
Mhm.
multiples of the incumbents Globe and PLDT. And even with that, people are still buying into it. However, there is one that is saying, listen, I'm going to wait until markets, settle down first before proceeding with my fundraising. And that is Double Dragon. They have deferred the REIT IPO to January na. And this is from a report from IFR. This is of course 17 billion pesos. A lot of markets have been watching this after, Ayala Land had created its REIT, and they wanted to do that, but they have now said that it's going to be pushed towards January. They have tried to reach this Bloomberg Double Dragon founder and co-chairman Edgar Injapsia, but he cannot still be reached for comment. So we'll be waiting out on Double Dragon and seeing what their plans are now for that delayed read. Meanwhile, they are, however, going up right now. That's up by 0.6% to 14 pesos and 8 centavos. Now, just from the equities, let's move on back to your car story here. It's a very, very interesting picture here because we were discussing earlier that there was a rise in the car sales when you talk about local cars, but when you talk about imported cars, the picture is a little bit different. Tell us more.
Well, not so much different, really, in a sense that both imported and at least local cars actually saw a pickup in the third quarter compared to
Okay.
previous quarters. But 9 months into the year, still both segments really seeing plunges here. if you try to take a look at the car sales of imported vehicles here, you're seeing here as of September, it has already declined 45.6%. That, of course, is coming from data from the Association of Vehicle Importers and Distributors, or AVID, that comprises 21 members representing around 26 global brands. Now, if you try to take a look at the exact figures here, in 2019, they were able to sell more than 64,000 units. Now, however, this year alone, they were only able to sell close to 35,000 units. So almost half yung nabawas compared to how much they sold back in 2019. Now, let's try to segmentize that even further. You can see here, passenger vehicles, in fact, plunged by as much as 48%, while light commercial vehicles were also down to 44% to 23,000 units. And get this, commercial vehicles even falling by as much as 68%, with only 223 units sold. In fact, in the first half, that's what the biggest decline here, plunging, if I'm not mistaken, over 50%. That's after dealerships closed actually for more than 2 months during the ECQ period. But there might still be some reason here to be optimistic, at least for distributors of these imported vehicles. That's like what I mentioned earlier. In the third quarter, get this, Dan, sales for imported vehicles were actually up by 212% to 15,471 units. That's actually close to half of what was sold so far this year. Back in the second quarter, they were only able to at least sell 4,955 units. So imagine the pickup that they did see in the third quarter of the year. And that's pretty much also in season here, because September usually sees an uptick in sales as the holiday approaches. And according to AVID President Maria Fe Perez Agudo, that's really due to all these distributors really restoring consumer confidence here, reinventing themselves, innovating, and capturing customer imagination as well. At the same time, what led to the recovery in consumer confidence for the third quarter was, according to them, the use of digital tools, best value promotions, as well as the implementation of health protocols in automotive facilities. And they are expecting a gradual reopening of the economy and the resumption of key government projects to actually spur more demand, especially for commercial vehicles. That segment grew by as much as 91% in the third quarter. So let's see if things are going to end well, at least for the imported car sales segment by the end of 2020.
Super exciting, no, Jess? But bakit ganon? Bakit tayo wala pang bagong imported car in the third quarter?
Considering it's a holiday, it's approaching already.
Oo nga. Di pa nangyayari sa atin. Okay, anyway, let's just take a quick peek at GT Capital's stock that's actually trading in the red. That's down by 0.8% to 400 pesos and 80 centavos.
Now, here are other headlines we're keeping our eyes on. Finance Chief Sunny Dominguez said the government isn't keen on hiking current taxes, not while the country is still under the grip of the pandemic. In an interview with Bloomberg, Dominguez also clarified that the government is not looking to sell its assets to raise revenues. Last month, Dominguez told the Senate that they are studying other sources of revenue for next year until 2022 to pay for the debt incurred this year. Still, the DOF is batting for the passage of the remaining tax reform bills, as well as other stimulus measures that will support the economy as it tries to recover as early as next year. The economy contracted by 9% in the first half and is expected to shrink by 4.5 to 6.6% in the full year. Dominguez said the national government may still borrow more from the central bank next year to plug some of its short-term funding requirements, but he said this is just a backup plan and that their first option is the commercial market. And bonds issued by private companies, meanwhile, climbed to nearly 1.5 trillion pesos as of August. The Philippine Dealing and Exchange Corporation said this indicates that the capital market has posted a steady growth led by the financial sector. PDEX noted an active primary market amid the continuous rise of outstanding corporate bonds listed since 2016. The financial sector has led the market since of the total bonds issued. This is followed by the property sector with a 24% share. Meanwhile, new corporate bond listings hit a record 375 billion pesos last year. up by almost half in 2018. Finance and banking officials, as well as other private stakeholders, are studying a proposal to raise the funding requirement of retirement plans for private workers by requiring firms to make partial or full funding. They hope to hit two birds with one stone to improve private sector workers' retirement plans and develop the local capital market.
Trade Secretary Mon Lopez clarifies that there is no need for small companies heavily affected by the pandemic to defer 13-month pay this year. This after Labor Secretary Silvestre Bello attributed him for saying he supports the deferment of 13-month bonus. That's a remark which was criticized by the labor groups. Lopez said there has been no official discussion on the deferment of 13th month pay. Instead, he urges the small and medium-sized companies to source funds for the 13-month bonuses from loans. The DTI also said earlier that talks are now ongoing for the possible provision of subsidies for small firms. Now, under Presidential Decree 851, employers must release the 13th month pay by December 24th of each year, but exemptions are allowed for distressed companies. Now, with some leadership issues with our lawmakers close to a resolution and our central bank intent on holding fire, have we properly made use of our arsenal to prevent a worsening economic fallout? Here to share with us his end of the year outlook, we have with us Carlo Asuncion, Chief Economist of Union Bank. Good morning, Carlo. Welcome back.
Yes, good morning.
Good.
Carlo, kicking off with your growth projections here, especially, everybody is watching out for the November print, which will be the third quarter GDP. This on the back of the IMF having another downgrade. Economists also starting to see even worsening conditions in the third and fourth quarter. What's going to be looking like?
Well, we're looking at still a double-digit decline. It's a range of negative 10 to 12. So, yeah, that's still because we're seeing that there's a slow pickup in. Of course, we know that consumption has been the worst hit, and it's still although the economy is reopening, but still there's still some level of fear. There's still some people are not still, it's not still at the level of pre-COVID levels. So, yeah.
Okay, Carlo, but we just got the remittance print, right, which was much better than expected. Even and the inflation, to a certain extent, it was lower than expected. And it's a very mixed picture here. Some analysts are saying that's good for the economy. Some are saying that's a sign that the demand is not picking up. Why are these two things, especially since we're entering into the holiday season, wherein normally close to, I think, 70%, if I'm not mistaken, anecdotally, of the spending happens in this period?
Yeah, well, I mean those variables that you mentioned are good. Are basically into, as you mentioned, play into consumption. And well, what we're looking at are really the sequential improvements, no. But still, this is where you see the unevenness of the recovery. You have, for example, still trade, languishing. It's still at a level that we hope that it will improve further, but it seems it's still in a decline, no. But it's really a challenge. It's really very slow at this point. That even though we have these sequential improvements overall, you'd still see a slowness of the recovery.
All right, Sir Carlo, where do you see us now, at least in our response to the pandemic, especially considering that the lawmakers over in the lower house find the budget at least getting passed within the year? At the same time, you now have Finance Secretary Carlos Dominguez, not closing really the possibility of once again seeking help from the central bank. So how do you see things faring in terms of our fiscal standing here?
Yeah, well, there's just been a lot of talk, no, even just around the fiscal policy has actually taken over the monetary
Mm-hmm.
policy at this point, especially in this during these unprecedented times. And it's very important that we do have we pass this 2021 budget on time, and it's very important that it's implemented accordingly, and that we've seen that. No, we've seen there was, it happened already in the past that when we missed the growth goals because of a what you call a reenacted budget, and so uh,
Mhm.
I hope we don't miss this boat. No, we don't miss on this one again, because as they
Mm-hmm.
say, what's that famous saying? You know, uh, insanity is doing things all over again, expecting a different result. So there's something has to give, something has to be done, and I think well, I've seen it. No, that the government, well, particularly the president, stepped in. Making sure that
Mhm.
this budget gets passed, hopefully on
Mhm.
time.
Carlo, let's talk.
How much of a
Go ahead, Jen.
boost? So, how much of a boost do you think will infrastructure spending at this stage really help? Considering as well that you now have lawmakers really zeroing in and scrutinizing the budget of the Department of Public Works and Highways here. At the same time, you have the Finance Department also banking on additional tax reforms.
Well, we know that the government spending is not enough. No, government spending is not really enough to help prompt the economy. And it's really like, for example, this economy is about, you know consumption is a huge part, investment is a huge part. So, but it's critical government leads the way. No, so that particular boost, I would say, it's a centerpiece. It's a very important part, so that we will be able to weather this pandemic. And the impact would be, you know a big, huge, going forward.
Carlo, can we talk about the debt levels and what is actually safe here? Because a lot of people have said, analysts, economists have said, we're one of the ones that have spent least in terms of fiscal assistance. We've been using the central bank basically to carry the weight of the economy, but at the same time, our debt levels are shooting up. But finance secretary is saying that's nothing to be worried about. You can see on my terminal here where we are. I mean, compared to other countries like Brazil, for example, it's still not that bad, diba? To what extent are you worried that this might actually start weighing on, especially fiscal stimulus might be needed and fiscal reforms and more taxes on the economy in an economy that's already suffering in terms of consumption?
Yeah, well, as you mentioned, well, as our economic managers have mentioned, we're still fine, But once we, yeah, again, because of our institutional challenges, if we fail to do what we need to do, then that's when you get to be worried, because along the way you again encounter other institutional challenges, like, for example, absorptive capacity. We've seen that even in previous and recent data, in terms of the budget and how it is spent and how it's actually going to where it should be going. Even in the bank, as we, of course, we have been part of the Bayanihan 1 Part 2, in terms of the distribution of the SAP, and it's really a challenge,
Mm-hmm.
and go and in that particular area where the money needs to go is it's very crucial, especially
Mm-hmm.
for the ones that are actually uh, uh, having a hard time. Yung tinatawag nga nila laylayan, no? The ones in the
Mm-hmm.
laylayan, really the ones that need help, and
Mhm.
they're the ones that are not, or are getting the least help. But those are what I'm saying is that there are really difficult institutional bottlenecks that
Okay.
need. reformed, you know. And if you see that, that actually it's worrisome already. So,
Mm.
but you just gotta have to push through with it, you know, and push through with the reforms.
But Carlo, there's a lot of liquidity in the markets right now. The central bank has already said enough na muna because we need to actually be sapping that liquidity. And they've even allowed, banks for the companies that are defaulting, the big companies, diba, to be part of the reserve ratio na. They're even buying money bonds from the treasury, giving money to the government. So why does this not feed into a more optimistic outlook for you, especially since there's going to be a lag naman when all of these policies, are going to start feeding into consumption, feeding into better loans, and also giving space for companies to recover.
I think one of the basic, the fundamental assumption is that the virus is still there,
Mm.
and we have not seen yet. There are some news about vaccine development on the third stage of trials. There's some challenges, but we see it moving. But still, it's there. So it's even if liquidity is high and fiscal reforms or fiscal stimulus is put out. It's really a challenge. It's really going to be a tough climb. Let's just
Mhm.
face that. No, it's really is there, and it's not going away yet. And be sober about it, and put that in some forecast, because every time you want to put in something more positive, it's just hanging there in the back of your mind.
Yeah,
You,
yeah.
like for example, di ba, right? I think that was August, the first week of August. We did revert back. I mean, who's to
Mm.
say that we are not going to revert back soon? Because a lot of uh, the countries that have already gone through the first wave are now experiencing
Back.
higher
Yes.
infection. So they have to deal with
All
that,
right.
and hopefully we don't have to deal with that eventually. And and then get the good news that a vaccine is finally has finally arrived.
Okay. Okay, Jess, I think
Last
we
question here,
lost
Sir
Jess
Carlo,
over
and
there.
very quickly now. How are you reading this? You have, of course, the BS. I think having the big problem here. Then you can
Yes,
proceed with
sir.
the question regarding the
Yes,
balance of payments
absolutely.
here. Yeah.
Sir, we just wanted to talk to you about the trade balance, especially with things going on now in the global economy. How do you see the Philippine recovery compared to the global economy? And is this balance of payment surplus to do with our own domestic weaknesses, or is it more to do with the global situation?
Yeah, well, I think it's more to do with how we basically the major factors how we deal with the virus. And you've seen that with I was asked yesterday about what I think about Vietnam, whether Vietnam are we going to be able to compete with Vietnam, and I think why Vietnam has had although it's small, it's still a positive growth in the past quarters. It's because of the way they dealt with the virus. So it's yeah, you have the BOP and how it's going to look like, but it's still going to weigh on trade. No trade, it's going to weigh on how we have dealt with the virus and how we are pushing on forward. And you see that in a lot of the economies now. More particularly Vietnam and
Mm-hmm.
others like Taiwan and even New Zealand. So, uh, I mean, that's a huge, I'd say, a variable in
Okay, so
trade. Yeah.
global weakness is not necessarily an excuse because we do see other countries actually pushing through and posting some growth. Thank you so much for those insights. That was, of course, Carlos Asuncion, Chief Economist of Union Bank.
Thank you.
Thank you, sir. That's a first look into the business day. Today is October 15, 2020. I'm Danny Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.